Peloton, the fitness equipment, software and spinning class meld of a company that appears to have enjoyed a considerable amount of success through the pandemic that has hit nearly every other industry horrifically. If you're not familiar with this company, you might be familiar with their ads, usually featuring a well-toned individual in an airy room or an exercise bike or treadmill. You usually then see a fitness instructor encouraging people along. It's tempting, and to be honest, the product is new and pretty enticing if you've got an interest in personal fitness. What's more is that they position themselves perfectly during the pandemic to soak up people unable to get to gyms and wanting to maintain their physique. In their own media, they describe themselves as a New York-based tech company, changing lives through a fitness platform. They then go on to say that they are also a hardware company, a software company, a content company, a retail company, an apparel company, a design company, a music company, a logistics company, and then they are apparently any type of company they need to be able to achieve their goals. I will add, this is all set to a very suspenseful soundtrack and it's all very enticing. As their video states, a Peloton is a pack, a group that work together during a cycle race to fight the wind. They play on that sense of togetherness, and to be honest, that's exactly what their product is trying to do. Bring people together for fitness whilst being apart. It's a tried and tested formula seen in similar guises in other tech companies. Take something traditional and analogue and make it digital and forward thinking, and it seems to be working, for now at least. The business breaks down in its largest segments into fitness classes sold by subscription to its users. They will usually access these classes either by a Peloton built and designed treadmill or static bike, or there's the option of the app which gives access to other exercises and activities which don't require the Peloton hardware. This is where the content element comes in. Peloton then provides you with live instructor-led activities and the schedule is jam-packed. Just as I put this together, I potentially had the option of jumping into a 45-minute yoga flow with Anna Greenberg, or if I had the Peloton cycle, the 30-minute sweat ride with Jess King is available in half an hour, and this would all be in the comfort of my own home. It's high energy and easily available. It's basically a fitness on demand model, and they've clearly curated the schedule of instructors to ensure that your next class is never far away. However, we're here for the investment potential of this company. Does it have legs, and if so, how far are these likely to run? As always, this isn't financial advice, but research-based opinion on the company intended to give you a resource to make your own informed decision on it. Although, remember old Squibsy when you're at the top, alright? Recent activity on the company has seen a strong uptrend for the last week. The stock price then took a plunge on Friday the 5th following the announcement of profits the previous day, and it seriously affected after-hours trading on the stock. The company announced that their revenue grew over the last quarter by 128% to 1.06 billion, which was a touch ahead of what had been forecasted, and was their third quarterly net profit, coming in at 63.6 million. Compare this to a year ago, pre-pandemic, when they had a net loss of over 55 million. Despite this, there were clearly investor concerns, as the company stated they were experiencing issues with the shipping and logistics in getting their devices to end users in a timely fashion, and as such it was announced that they intended to pledge $100 million into expedited sea and air freight to circumvent this issue. The chief executive, John Foley, stated the delivery window will return to a 4-week window by June. Important, as some customers were taking to social media to complain of multi-month delays and poor communication from within the firm. That said, delays aside and an incredibly difficult business environment, the company has seen stock rocket up by around 382% in the last 12 months. A stock bought around 12 months ago was worth 28.62 pence, and as of writing, even after the downturn on Thursday evening into Friday, your stock will be worth 148.3 pence. As such, a £500 investment at the earlier point would now be worth £1,910. So going forward, could this be a winner in terms of investment today? Very much so. Despite the profit announcement and the clear stock dump that occurred in the aftermarket on Thursday evening, the stock didn't really break the 142p lower barrier, which more or less matched a low it touched a week previously and possibly signifies a level of support behind the stock. Throughout the day, it steadily climbed to a high of 150.53 pence before wavering towards the end of the day and the end of the week, closing at 148.3p as mentioned. It's a confusing stock to try and read the charts on, and long-term confidence is going to be somewhat of a lottery given the unprecedented market environment that we're currently in. Over a 1-month period, we see higher lows appearing in the run-up to the announcement today, supporting an uptrend. There is also a breakout and a significant price high during this period, seeing the stock rocket to 170.41 pence. However, the following highs do then regularly fail to break through the resistance seen previously at just over the 158 pence mark, save for a little breakout on the 22nd of January, which sustains for the working week before an eventual crash. As said, attempting some chart analysis over this period is somewhat difficult given the profit announcement causing some volatility towards the back end, but it does seem to signify that perhaps momentum started to slow as we closed in on the profit announcement. For the medium-term investment, looking to cash out before we start to return to true normality, we can scrutinise one-day charts and attempt to get an idea on direction despite the crash. As you can see from my crudely drawn chart, we have two highs marked, the second exceeding the first, and actually I could have drawn a third high shortly after high number 2, which ever so slightly pipped the previous high. We can see that after the first high there's a crash in the price, but this finds support and doesn't exceed previous lows. Importantly, during the first high, our bottom two indicators, the stochastic and RSI, agree the stock is overbought, and this is then confirmed in a crash of the price. We then see momentum build again between the two yellow lines, and we again see the stock break into overbought as we hit the new price high. That said, it only sits there for a short while this time, causing a short drop in the price. At the back end of the day, and indeed the end of the market week, we then see a building momentum about to reverse into the positive, circled on the top indicator. Albeit it wavers slightly, but it's possible this was more so owed to the impending market closure for the weekend. On the second indicator down, we can see there was a breakthrough on the stochastic, and this quickly diverges, again wavered, but I'm running on the assumption that this is just market closure orientated rather than a crash. Even with its waver, it's a very confident breakthrough, supporting a price surge. We can then also see the RSI appears to be getting ready to diverge from the price line. This again supports a good bullish trend occurring. A late entry investment of my own on Friday saw a 3.77% gain, and this was only closed on an automatic take profit suited for a safe day trade position on a quick turnaround exploiting the profit announcement. I then reviewed the charts and immediately reopened for a medium term investment. So, in conclusion, even with a turbulent end to the week, the company is on a good general uptrend, and the turbulent show on Friday may actually have only provided a good entry point to hop on for continued growth, dependent on what could occur on Monday morning for an entry price. The issues I foresee in the longer term with Peloton's business model is what happens when people can go back to gym-based classes. Many are going to be more open to a gym membership rather than a 1.5k piece of equipment and a subscription. But whilst they remain closed and people are turning to home exercise, I should think the uptrend will remain strong. The company's decisions as we start to move back to normal life will be tantamount for the long-term success of the stock, but for now it seems that the momentum isn't letting up. What do you think? Does Peloton have good legs with which it will run to dizzying new heights? Or is it simply a success of a pandemic and it will see a crash once the pandemic closes off? Have you made any investment into Peloton? And if so, when do you expect to cash out? Are you in it for the long run? Let me know in the comments below.